Well, welcome to another session of Down Under Trading Premium. We're going to be looking at Bitcoin, Sweat, NIA. Got a request for Wi-Fi, which I've never heard of before, but that's fine. We can have a look at that. And then also going to talk about how I'm going to be playing, what's going on at the moment. I think given Bitcoin's movements, we'll jump straight into Bitcoin first up. So it looks like we've been dumping pretty much the entire time I've been asleep, which is fine. We can have a look to see where do we think price could be going. If this is just a local move, or whether we're looking to go lower. So at the moment, it looks like it's swept the 786 and is bouncing back up. If we start getting some closes below this 786, which it looks like it might because it did get quite below it, we could start to see a bit of a continuation down. And there's a lot of key levels below that we can watch. And this is where it does start to get a little bit confusing, and it's going to be probably more of a case of let's just wait and see what happens, as opposed to having some longs in place, except for maybe some critical levels that we think could be the bottom of the run. So the first area that we've got, the first area that we've got to the downside to watch for is the top of the channel that we broke out of, sitting at about 39.2. Then there is also this trend line here at around 38.5. And that is essentially the trend line from the run up from 35k, which it's been tested once back here, and it got a strong bounce. So we could see a nice bounce from this trend line around 38k. I suspect that the top of the channel will get broken, and we may just go to the trend line and then bounce up. That is an option, but given how we've been running up for 2 months, I don't think that's going to necessarily be the end of the run. And we got this 50% level here, and that 50% and 618 is drawn from back here, the low back in August, to the high that we just printed. That's where this 50% and this golden pocket is drawn from. This is where I think we're starting to get into more likely territory in between this 35 to 32k zone. And what we're looking for here is we're looking for, all right, we had the banking collapse back here that formed a high low. We had this low back in August that formed a high low. So what I'm looking for here is not the little in between movements like back here or over here. I'm looking for, all right, where is the next high low going to potentially come in at? And I think this zone is starting to look pretty good around 32k. 30k, that's the bear market low to the current high. I'd be highly, I highly doubt that we're going to get below this level. Can't say definitively. What I'd be willing to put a fair bit of money on would be that we're never going to see 25k again. I think it's highly unlikely that we're going to see under 30k again. A bit like back here when we made this low at 24.2. This is on the Bybit perpetual chart. At that point, that 50% level, the 30k 50% level, was sitting at around 23k, give or take. and we got within $1,200 of it. We're up here. It's a bit more money. I think if we got down to this golden pocket, that starts to look like a pretty good zone for getting into some decent longs. It's a fair way off from where we are. There is also, if we go to our little fork price range tool, and we go 20% from the top, we see where this sort of takes us. That's 21%. As we went through these, we'll go to the weekly chart. It's a bit easier to see. As we had a look at these corrections, I think it was last week, this one was around 23%. This drop here was around 22%. So if we're looking at around a 21%, 22% correction, we're probably sitting somewhere around the 34K mark. Why could this drop be deeper? Or what's the case for this drop being deeper? It's purely due to the massive run up that we've had over 8 weeks, which we haven't really seen before. If we have a look back here, like coming out of the lows, it was a 4-week run up before we made the high low. Then over here, we really only had 2 big weeks of going up. We had 3 weeks of sideways before we just moved sideways, and then we formed the next high low. This one's had 8 weeks up, so we could expect that there's going to be a deeper correction. And if we were to go down to, say, 32K, we're looking at a 28% correction, which seems like a lot, but it really isn't when you look at how quick we ran up. We've run up 46% from the low. So to run up 46% to retrace 28% doesn't seem like too bad of a deal. In my opinion, it creates an opportunity, probably one of the last opportunities to get into alts and Bitcoin. And by last opportunity, I mean to get in at a decent price. You can still be DCAing into alts and Bitcoin right through to the halving, if that's what you wish to do, and you're sort of being sidelined for a larger period of this cycle. But at the moment, my target zone is going to be between, I'd say probably around this 34.5 to 31.5K. If this move that we're currently seeing at the moment does turn out to be just a bit of a mild correction to go up higher, to go back up to this 48 to 50K level, well, these fibs down the bottom, they're going to go up with it. They're going to change, and they're going to go higher. The 50% level might end up being around 33K, 34K. This golden pocket might be around 38K, and that means that we're unlikely to see below those levels ever again. So we really need to pay attention to what's going on with Bitcoin at the moment. To the upside, if we were to see a little bit of sideways and it starts looking like it's reversing, to maintain the downtrend of this move, I would suspect that we're going to get some rejection around this 43K level. What's the confluence of this level? Well, first off, it's the local golden pocket, and it also has confluence with these lows here. So we'll be testing that prior range low. If it was to break through here, then we need to keep an eye on the key level at 43.6. If it was to get above 43.6, then I'd be looking to take some longs with a target of up here around the 48 to 50K. I'm a bit skittish that that will actually happen, where if it was to happen, I would have expected it to happen earlier in the month rather than now. The reason being is that we have not seen a pre-halving year close above this 50% level, which is from the all-time high to the bear market low, ever. We've never seen it. It's never happened in a cycle. we've pushed through it. We've tested it before the halving, but we've always closed the monthly candle below it. It doesn't mean that it's going to always be like that. One day, one cycle, it will close above it. But until it happens, we sort of we study the past to forecast the future, and we don't have any reason to say, oh, it is going to close above it. We've got to block out the noise of ETFs and yada yada. They're starting to lose their steam now. Those news stories. I mean, there was, I can't remember which company it was that spoke up, the CEO on CNBC yesterday. I think it was talking about ETFs are going to be approved in January or Q1, and it didn't even budge. It didn't even budge the market. So that sort of news now is starting to die off on making an impact on what's happening. The other reason why I don't think that we're going to go up is if we jump into a Binance chart. I like to use Binance to check out spot volumes. We go into a 15-minute time frame. So this dropped down from 43,200. It got $200 million dollars of volume in a 15-minute period, which is pretty damn massive. It's pretty big. When we see volumes of that size, it's highly unlikely to be a fake out. I mean, we can go back and look at the high over here. So this run up to 44.7 was only 80 million. My general rule of thumb, if the pump is under 100 mil, it's likely to have some sort of reversal. And that's sort of what we've seen here. 80 million to the top. Then we started to see some reversals. That was only 55 mil down to 43.7, and it just sort of maintained sideways, and it maintained sideways until we got the big drop with the 200 million volume, which is quite a lot. Can even have a look at what we've got right now. So we've had just over 100 mil on this run down to 4,600. I'm definitely in the bag of there's more downside coming, or likely to have more downside coming than there is upside. So regarding Bitcoin, below 35k, I'm going to add some more to my spot bag because I did sell 5% of my bag on the weekend. I'll add more to my spot bag, and I'll be looking to take longs in this zone. Outside of this zone, it'll only just be purely scalping. If I was to take a trade, short term, minutes, hours, maybe a day or two holding of a position. Down here, if I was to get a position, that's one that I'm going to be holding on for as long as I can, as long as the market tells me that it looks like it's going to be reversing and it's going to be going up. That's how long I'll hold it until I'm satisfied with the results. We did have requests to look at NIA. We'll go to NIA first. So NIA's been on a bit of a tear. I'm not sure if it was in the premium or general general catch up last week, or even perhaps both. But I did talk about a couple levels that I was keen on looking at, because we were down here at around 220, 230, I believe, when we caught up. And I initially said that this 240 level was interesting. I was keen on that. I thought it was going to get up to there. And then we also had these tops here, which we could have come up to have a look at. And it looks like it came up to around $2.60. If we look at this pump back here, it does look quite similar in the fact that it made the low. Made the low, and then it just went on a massive tear up for about 4 weeks, 5 weeks. and we've had something similar happen here. This run up has been quite similar, but I feel like this time it's different. I reckon that this here is the low. I don't reckon we're going to come down and break it. So now we need, if this is something that you want to bag, you can start bagging it now because the upside for Nia is quite massive. You can start DCAing into a position, whether it's $2.50, $2.20, or $1.50. It's not really going to make a big difference from a medium to long term investment. If you are trying to time your position, I'd be saying under $2 is a good buy. That's definitely a buy zone. Where can it come down to? I would say around $1.50 is going to be about as low as it can come. Even at $1.80, there's quite a bit of support. We see that it's come down, rejected, came down, rejected, and then it bounced. So even at around $1.80, could be a pretty good area to get into it. I'm pretty sure I've got an order sitting in this $1.60 to $1.50 zone. I'm probably definitely going to start DCAing under $2 into Nia. And, if it hits my limit order in this zone, that's great. If it doesn't, that's fine too, because I'm already going to be DCAing into it. Can go and have a look at Sweat. Sweat's actually not been performing the best because we've now broken back below the 50% level. So it's not the greatest, but it's also not the end of the world. I mean, we'll draw a local fib just to see where things are going to go. So looking at this local fib, we could see under 1 cent. I think it's probably likely. We're really not far away from it, especially if Bitcoin continues to go down. What we don't want to see is Sweat coming outside of this channel. I want to see it maintain the channel. If it maintains the channel, that's fantastic. That's really good. Bitcoin looks like it's going to be moving fairly quickly over the next couple of weeks. So we really don't want to see this low here at 0.85 cents get broken. We can come down and make a double bottom, but we want to see a nice reaction off it. We want to see it bouncing off that. I would say that would probably be the low for me. If we do start seeing it breaking down from there, then it's going to be having a deeper retrace. Probably down to these levels here. That's a proven support level down here where I've got the horizontal line. It was quite heavy resistance for about 3 weeks, and then we broke through, and then we retested it, bounced, retested again, bounced, had a big pump, came down, tested it a third time, and then we just took off. So that would be pretty much my floor price. I definitely don't think we're going to get below there, and that's quite a bearish outlook to be looking at this level. But we have to take it into consideration. Really don't want to see below 0.85 cents. We probably won't, but we need to look at these options. It does make a good case for a double bottom, and then a nice bounce up. Been a steady run up. We've sort of had a bit of a plateau over the last 5 weeks. So we just got to see where this correction comes into. Well, the Sweat might actually be one that I'd be looking to long, to be honest. If we start getting down to under 1 cent, I might even put in some limit longs at around 0.85 cents, because it does line up with the bottom of the channel for next week. So there is a few confluences there. A nice double bottom of the channel, get a nice bounce up to this golden pocket, and that's probably where I'd be looking. That would be my target for taking profits. at least half the position, probably more, because it would be good to see Sweat break out of this panel to the upside. It's been in it ever since it made its low, so it could really start moving to the upside. Now we did get a, let's check Bitcoin 41k, Wi-Fi. So it looks like it's fairly new. Right, so it's only been around since probably around April, I believe. Had a big pump on launch, as they typically do. Came down, been in an accumulation phase, had a pump, came down, found the prior range highs as support, and has now come in to make a higher high. I'll just turn off these indicators so we can see things better. We could see Wi-Fi come down and have a third accumulation, potentially. We can see, we'll go back here and draw a fib. Actually, so this is only roughly drawn this fib. It's probably going to should have sat a bit lower. Say the 786 provided support in this second accumulation phase, and we've got a double bottom at either end. And now we're up here, so we can now draw another fib. If we were to come, and that actually lines up nicely, the 786, if we were to see this retrace, based on what happened in this range, we could expect it to come down to the 786 and sort of bounce on the top of it. That also has confluence with the prior range highs, which is what we saw with this range and this prior range highs. Pumped up, came down, found the 786, went sideways. The 786 confluence with the prior range high, and then it had another pump up. So if we were to see a third accumulation, we could expect it to come down, bounce in here, and then take off again. But looking at the chart doesn't look too bad. And these are just accumulation phases, pumps up, and then sell off, reaccumulation, pump up, sell off, reaccumulation. At one point, it'll either just hit the bed and go down, or continue up. And that probably really comes down to what sort of fundamentals the token has. You probably don't hear me say that too often. But when it comes to these small caps, I'm assuming the Wi-Fi map is a small cap or a micro cap even. They do require some sort of use case for them to go up. You do see memes in that pump. Their use case is that they have a massive community, a massive following, a lot of hype, a lot of influencers filling it. But for these smaller tokens that don't have that, they need to have some sort of use case in order for them to have a bit of a pump, and a sustainable pump. Otherwise, you do just see these pumps and dumps, except these ranges will normally be forming lower lows as opposed to higher lows. Do we have any questions about what we've covered off so far? Can I jump into the voice chat? Are you able to punch it into the premium chat? I don't think I can see the. Oh no, never mind. I can see it. No, no comments. It's all good. So, keen. looking to get a better idea on what's long and short. All right. So when it comes to longing and shorting, that's for me, that's only a small part of what I'm here for in crypto. Um, as you've probably seen from looking at my spot investments that and how much you know about my position sizes when it does come to longing and shorting, I'm a lot more heavily weighted into making spot investments than I am long and shorts. Um, so that's what my focus is now. My focus is on buying the dip with the alts that I'm keen on, and waiting for Bitcoin to sort of form some sort of bottom in order to gauge where the market's at. We're still in a part of the cycle where Bitcoin's still making higher highs on the dominance. So that would suggest that Bitcoin's still leading the market. If Bitcoin's still dumping, typically majority of the alts are going to be dumping with it. And it's only once Bitcoin starts picking up again, are we going to start seeing some of the alts picking up again. So I guess when it comes to longing and shorting, I'm going to be looking to Bitcoin in the first instance. Once it looks like it's gotten to the key levels that we went through, that's when I'll start looking at alts and where are they going to be. I can start charting alts right now for longs and shorts, but if Bitcoin starts falling pretty quickly and the dominance starts going up, it's likely to throw your ideas off the table for alts because they can definitely fall harder, break those key levels a lot easier, particularly if they're not in a strong position on their Bitcoin pair. So I prefer not to cloud myself or confuse myself by looking at an altcoin on the USD chart and coming up with a plan, and then Bitcoin goes down to 32K, and that plan that you had for that altcoin is shot to smithereens because the alts actually dropped 40% as opposed to what you thought was only going to be a 50% retrace. So I'd recommend just sticking with Bitcoin for now. You can have a look at alts from a spot investment perspective. I do think that that's a good idea. But if you're looking to long and short, I don't think now is the time to be planning for a long and short. It's need to wait and see what happens with Bitcoin and then start looking at alts. The market is unlikely to come down and bounce in a V-shaped recovery in the matter of minutes. It's going to give you a bit of time when it does get down there. And when Bitcoin does take off, it's likely to leave the alts behind a little bit, because it's going to be taking the liquidity from the market. The dominance is going to rise when Bitcoin bounces, and then the alts will start to follow once Bitcoin gets to its level or breaks out and gets a bit of sideways movement. That's when you're going to see the alts start to pick up. And we sort of saw that at the moment with when Bitcoin got up to 45K. Bitcoin ran up, dominance ran up, alts picked up slightly, but nowhere near as much. Bitcoin went sideways, had a little bit of a dip, and gave the alts and Ethereum some breathing space. And then we saw the alts and Ethereum pump after Bitcoin had already been at the high. So that's sort of what my gameplay is coming to the downside. Wait for it to make the low, bit of sideways, take off again, and then I'll start to look at getting into alts at that point. I know it doesn't really answer your question, and you're probably looking for what can I get into a position on. But my best advice when we're having these large movements like this is no positions are necessarily a good position. Yeah, that's right. That would be my advice, mate. As I'll jump in and have a look at INJ. Well, you can still scalp in this market. It's definitely good for scalping. But as I've made fairly clear, scalping, in my opinion, is a risky game. You can make a lot of little wins, but then as soon as it chooses a direction, you can also get wrecked and lose the entire wins that you've just made, plus some. Some traders love to do scalping. They've got their risk management under control, and Um, they're there staring at charts and they can put the time into doing it. But for me, I prefer a less anxious trade because I would can imagine that scalping like that day in day out can make you quite anxious, which then opens you up to be trading irrationally and trading with emotions. And I personally don't want to expose myself to that. But if you're comfortable in that situation and you can keep those emotions in check, by all means go for it. But I, more often than not, and a lot of the people that I know that do trading, they'll make a lot of wins, but then they'll also have some decent losses that typically claw back those wins and plus some. Yeah, we'll jump in and have a look at INJ quickly. I did see that it did pump up over $20. Oh, okay, it's still going. $25 now. Just get a nice clean chart. Looks like it's going to pump to all-time highs. Its only sort of resistance that it's got now is a double top. That's the only thing stopping it. Double tops are pretty strong resistance. You could look to take a short at 25k, at 25k, at $25. Um, I wouldn't be putting the house on it, and I wouldn't be doing it on max leverage. That's for sure. You've got to take a nicely managed position. Um, but if it does break through, I wouldn't be chasing another position, because once it breaks through, then it's going to go into discovery, and it might stop at $28, but it might also stop at $50. It really becomes a bit of a guessing game. What's going on? If we were to, well, we can do a little bit of projecting. The 1618 sits at $40, so you're definitely going to want to have a stop within reason, low leverage, and if it does go through, just let it run. You could, if it did do something, I'll just mark this out so we can see it easier. If the price did do something like this, I mean, you could look to take a long on the retest of $25, which would be, it breaks the high, comes back to retest the prior all-time high, and then takes off. You could look to take a long here. So you could look to short here for a double top. Or if it broke through, I'd even want it to maybe go higher than 26, probably up to about maybe around $27, $28, something like that. Came back down to test the 25, take a long at that point, and you're basically longing the breakout then. So that's probably, if I was to be trading Injective, that's how I would look at it. Will I be trading Injective? No, I will not. Reason being, Bitcoin's on its way down. Injective's going counter trend. It's going on its way up. How long is it going to go up for? That's a good question. If I was to be taking a trade, if I had to, it would probably be the short position first. And taking the long, I'm not sure I would take the long, just because I'd want to really be watching the charts when it does go into discovery, and seeing, all right, where's it looking like it's getting a bit of a reversal, so I can exit my position. Whereas if I was to take a short and it was and are rejected from the $25, it's likely to come back down, to wherever. But it's likely to come back down and follow the trend of Bitcoin for the next few weeks. So you won't need to be on the charts as much in that instance. Um, so actually, this is one of the best looking charts I think for Injective. Almost breaking out to new highs. It's probably the best chart that I'm aware of an altcoin that's been around for a couple of years, coming up to test its previous all-time highs. Made pretty much a 20 plus X from its bear market low. Looking really good, I think. So I think that probably draws us to a bit of a close at the moment. Guess what to watch for the next coming weeks is Bitcoin, and to see what happens. It'd be interesting to see it close below the 50%, the bear market, to the all-time high 50% level. I suspect it will. Alts are definitely pulling out of their range lows, if they haven't already, and I think things are looking very positive for the future, for the next sort of 18 months, potentially 2 years for crypto, and the days of looking for shorts are definitely numbered. It's definitely a case of, right, we really need to start flipping our mindset, make sure that we've got our spot bags full, and looking for longs. The reason why we want to look for longs rather than shorts is that when the market is typically going in an uptrend, taking a long can be a lot more forgiving than taking a short, because the general direction is going up. Whereas when you're in a bear market, taking shorts is what you want to be aiming for, because they can be a lot more forgiving going, because it's typically in a downtrend. That's just something to be a bit mindful of. It is hard to flip that switch. On myself, I'd say 70 to 80% of my trades are probably short or have been short. And now I'm starting to have to flip that mindset and look for longs. So it is something that we all need to work on, but that we're all here to make money, and that's how we're going to do it. So with that, I just want to thank you guys for joining in. Hope that you took something away from it. Looking forward to catching up with you next time.